In 1989, the land under Tokyo's Imperial Palace was said to be worth more than all the real estate in California. At the peak of Japan's economic bubble, the country's stock market reached nearly $6 trillion in value, making it the largest financial market on Earth. Then, in just a few years, trillions of dollars vanished. Property prices collapsed. Banks were drowning in bad loans. And the world's most unstoppable economy suddenly stopped growing. This was the beginning of what historians now call the Japan's lost decade. An economic disaster so severe that it left Japan struggling for more than 20 years. The collapse tracked back to the decades after World War II. Japan emerged from the war devastated. Cities were destroyed, industries were crippled, and the economy was in ruins. But over the next 40 years, something remarkable happened. Japan rebuilt faster than almost anyone expected. By the 1980s, Japan had become an economic powerhouse. Its companies dominated global markets. Japanese electronics flooded stores worldwide. Automakers like Toyota and Honda became global giants. The country's economy grew at breathtaking speed. Investors everywhere began to believe something extraordinary, that Japan had discovered a new economic model that could never fail. And that belief would become the seed of disaster. In the mid-1980s, global financial tensions forced Japan into a major economic shift. In 1985, major economies signed the Plaza Accord. The goal was to weaken the US dollar and strengthen other currencies, including the Japanese yen. Suddenly, Japan's currency surged in value. This threatened Japanese exports, which had been the engine of the country's economic growth. To protect the economy, the Bank of Japan made a crucial decision. It lowered interest rates. Cheap credit flooded the financial system. Borrowing money became incredibly easy. And once cheap money entered the system, it began chasing one thing above all else: assets. By the late 1980s, Japan was experiencing one of the largest financial bubbles in modern history. Stock prices soared. Real estate prices exploded. Banks were lending enormous sums to investors, corporations, and developers. In Tokyo, land prices doubled and tripled in just a few years. Some properties were selling for hundreds of thousands of dollars per square meter. Investors believed prices could only go one direction: up. The Japanese stock market, known as the Nikkei 225, reached an all-time high of nearly 39,000 points in 1989. At that moment, Japan's economy looked unstoppable. But beneath the surface, the system had become dangerously fragile. Banks were issuing risky loans backed by inflated property values. Corporations were borrowing heavily to invest in stocks and land. And the entire economy was being driven by speculation. The system looked strong, but it was built on debt and rising asset prices. And when asset prices stop rising, bubbles begin to collapse. In 1989, the Bank of Japan realized something alarming. The bubble had grown too large. To slow speculation, the central bank raised interest rates. At first, the effect seemed small. But bubbles are fragile. When borrowing became more expensive, investors started selling assets. Stock prices began to fall. Then real estate prices followed. Within 3 years, the Nikkei 225 had lost more than half its value. Trillions of dollars in wealth vanished. Property values collapsed across the country. The bubble had burst. But the worst consequences were only beginning. As property prices crashed, banks discovered a terrifying reality. Many of the loans they had issued were backed by land that was now worth far less than the debt attached to it. These became known as non-performing loans. Banks were suddenly sitting on massive hidden losses. Instead of admitting the problem, many financial institutions tried to hide it. They extended loans to failing companies just to avoid recognizing losses. Economists later called these businesses zombie companies. Companies that should have gone bankrupt but continued operating thanks to bank support. The result was an economy that stopped moving. Investment slowed. Growth stalled. Deflation began to spread, a dangerous economic condition where prices fall and consumers delay spending. Japan entered what became known as the lost decade. In reality, the stagnation lasted far longer than 10 years. The Japanese government tried many solutions. It launched massive stimulus spending. It lowered interest rates close to zero. Banks were eventually forced to restructure and write off bad loans. But the recovery was painfully slow. For years, the economy struggled to regain momentum. Even decades later, the Nikkei 225 has rarely returned to the levels it reached in 1989. One of the world's most powerful economies had been permanently changed. If this story feels familiar, it should. The same patterns appeared during the 2008 financial crisis. Cheap credit fueled rising asset prices. Banks issued risky loans. Investors believed prices would rise forever. And when the bubble burst, trillions of dollars disappeared. Today, similar risks continue to appear in global markets. Housing bubbles, stock market speculation, crypto booms. History keeps repeating the same pattern. Confidence leads to speculation. Speculation creates bubbles, and bubbles eventually collapse. The Japan's lost decade reminds us that financial systems are fragile. Even the most powerful economies can collapse when speculation replaces stability. And history shows that every generation believes its boom will last forever, until suddenly it doesn't. If you want to understand the hidden forces behind economic crises, financial bubbles, and the collapses that shape our world, subscribe for more historical documentaries. Because the next financial crisis may not be in the past. It could be building right now. This is Neto, the creator. Follow for more.